I did a video on when to sell, which is very helpful, but I think we need more tools. Now, of course, nothing is financial advice. This is educational. We've done our research. We've got a thesis. It's been back tested, but it's still not financial advice. But let's get into what happens with Bitcoin when we've got golden crosses and death crosses. And then let's have a look at the M2 money supply, which Raoul Pal always talks about. So let's start with this. If you're not familiar with what a golden cross is or what a death cross is, you have the SMA 200, so 200-day moving average. When this goes above the 50-day moving average, then this is a death cross. It is kind of short-term bearish. We'll explain more in a second. The golden cross is when the 200-day goes below the 50-day, and this is bullish. Now, when I say this is bearish, it's like a local bottom, but more on that a little bit later. If you have a look here, these are what you need to add. Just go up to your indicators and then just add SMA, simple moving averages, and then go to your settings and just make sure that this one is 200 days, white if you like, and then this one here, 50 days, 50 length, and red. So this information was well researched. Ben Cohen being kind of the GOAT when it comes to this sort of stuff. He's a creator. I'll link him below. But every video of his is very, very long. So I'm trying to shorten this down to give you some condensed alpha. So what we have when we've got this death cross is we have a local bottom. And then what typically was seen is the price will go above the 200-day moving average, but then it'll actually start to retrace. And it could come above again, and then retrace, and then we could go off to the races. If we look at the last time that it happened, and this is only with Bitcoin. So we're not looking at this with other charts like Ethereum or Solana, because the Ethereum or Solana price will typically, well, Ethereum not so much this cycle, but Solana has been tracking the Bitcoin price very, very, very well. And if you have a look at their death crosses and whatnot, it's not as helpful as just comparing it to Bitcoin. So we're just playing with Bitcoin here. So this was the 10th of August last year. And then we had in September, we had Breakpoint and Token 2049. You can see just before we had a local bottom, and then we came down a little bit, and then we went above the 200-day. We came down a little bit. This is a high low. This is higher than here. Then we came above again before coming down and then starting to move up. And that's when we had our golden cross. And from this period, it was all over for the bears, and the bulls took control for sure. I've now gone back in time to the previous golden cross and death cross. So this is September 23. We can see the same thing. Local bottom. Come on down. We peaked above it just slightly. Another peak above it slightly. And then down again. Then we started to go off to the races. We got that golden cross. And then wham. Now the length of time from here to here, this can vary. This was 48 days. Sometimes it's more, sometimes it's less. The point is the structure of it. Now, I don't know if this is going to come on down, come up a little bit, go a little bit higher, but I would assume it will kind of pull back like we're seeing. It would pull back down, and then we may want to buy a little bit lower and then wait for it to come up again, and then wait for a little bit more confirmation before we're really off to the races. In other words, you could even potentially take a small amount of profit here if you wanted to in order to buy back lower, but there's nothing stopping this from closing and then going up again. But in general, there is a pattern that we keep on seeing. But how does this work with M2 money supply? Because that's very important. So this is an overlay. What we can see here is Bitcoin essentially tracks the M2 money supply exceptionally well. And there is a lead amount of information on this. We've got more data here. And it's not perfect, but you can see just how well it works. Raoul Pal always talks about this, the man behind Real Vision, and like it's extraordinarily accurate. If you just went off this metric, it would probably be enough of a trading strategy for you. But of course, we've got more metrics than that. So we're seeing this little bit of a peak here, and this screenshot was taken yesterday. And now you've seen we've come on down a little bit. And so we could be coming down to the 28th. And then maybe we start to come up on the 1st. But it's not exact. This is what M2 money supply is showing. Keep in mind something very important. We do have token 2049 coming up, but we could have something like a whole lot of pump a little bit of a pump there. It could come down a little bit, but then it could be even a week after that we start to get more of a pump. But, we're just looking at data pieces and trying to piece it all together. This is what makes sense to me. Then the date that makes a lot of sense is Wednesday, the 7th of May. And that's when we should start to see a whole lot of up movement. This relates to the FOMC meeting, which I'll go over in a second. But I would certainly like to be buying if it comes on down a little bit lower, and then get ready for what I think will be a bullish few months, or hopefully longer. Now, quickly, let's have a look at this. We are wanting the rates to come down, but we're not expecting the rates to come down. This is a probability of a rate decrease. It's not going to happen. Potentially in June, we could see a rate decrease though. And this is one of the reasons why I believe Trump is trying to get rid of Jerome Powell, because Trump just wants rates to come down, but Jerome Powell's like, no. What we could see though, is we're currently in QT, quantitative tightening. This is where the Federal Reserve is managing and kind of selling assets on its balance sheet. It's not money printing, it's not buying from the open market. We could see quantitative easing start to happen. Unsure if it's going to happen like super fast, but if the stock market doesn't recover, this could be ordered or pushed by Trump's administration, and that would start to inject liquidity into the markets. That's the thesis. It's not financial advice. It's worth considering, though. I think it's going to play out like this. This is data points from Ben Cohen, Roll Paul, and just a whole bunch of other people, actually, all molded into something which looks like it will work. By the way, make sure you subscribe and check out these videos over here.